Disputes Decoded with me, Chris Campbell. This is an ArbTech podcast series where we will take a deep dive into a variety of legal tech issues by way of candid interviews with selected subject matter experts. Technology has, and always will, have a profound impact on dispute resolution. And in this series, we'll give you insights into where we're going next. We will demystify complex concepts, decode the jargon, and provide practical insights on advancements across the legal tech space. Join us as we navigate this future where law and tech converge. Welcome to Disputes Decoded, where we download the field of arbitration into the future. Hello and welcome back to another episode of Disputes Decoded, an audio initiative between Tales of the Tribunal and ArbTech. Today you have Chris Campbell, who is a host of Tales of the Tribunal, leading this initiative. I have two guests with me. Once again, you're probably getting used to that reality now at this point, and they are two folks. They're going to talk to us about crypto disputes. Now, if you've heard that term, you may or may not have any idea what that means. I certainly didn't at the time that I was preparing for this episode, and maybe still don't. And I look forward to learning and hearing from both of them. I have with me today, Joshua Ashley Klayman. Hey, Josh, welcome to the show.
Hey, thanks so much, Chris. It's great to be here.
And Mr. Nino Sievi. Nino, welcome.
Hi, Chris. Good to be here.
Great. Thank you both for being here. And so we're going to jump into some questions about crypto disputes here in a moment, because I certainly am really interested and want to know kind of what the lingo is and what the buzz is. But more specifically, before we get there, tell us a little bit about yourselves. Who are you? Where are you from? What do the people need to know? And we'll start with you, Josh.
I'm based in the US, specifically the New York, New Jersey area. I am at Linklaters, which is a global law firm. And at Linklaters, I'm one of our global tech sector co-heads, and I'm US head of Fintech and head of Blockchain and Digital Assets. Outside of the firm, just a couple of things that I do. I'm on the board of the Wall Street Blockchain Alliance and on the board of Wharton's Cipher Accelerator.
Very cool. Lots of interesting threads to follow up there. And how about yourself, Nino?
Well, as you said, I'm Nino Sievi. I'm a partner with Nater Dallafior. That's a disputes boutique here in Zurich. And because it's Friday, a fun fact, although my name does sound Italian, I'm not Italian. I don't speak Italian. The reason why I'm called Nino is because my parents thought it's a good idea to name me after their favorite bartender at the time. And I think this gives me a lifelong permission to drink gin and tonic whenever I feel like it, no matter the time of the day.
Well, look, Nino, plot twist. We have a very special guest here. Nino, the bartender. No, just joking. That's a cool fun fact, Nino.
Oh, may I just say something? It's actually really funny because, my parents had a kind of unusual, maybe not quite as unusual reason for naming me Josh, which is that they thought it would help me in business. Right. So I guess we can toast to the parents this morning for their.
Cheers to that.
And on my end, I think my parents just like alliteration. Chris Campbell. I don't know. I guess before we jump into crypto disputes specifically, both of you, and then we'll go with you first this time, Nino. Did you know that you always wanted to go into the practice of law, or how did you get first involved with the crypto space?
I always wanted to be a lawyer. I am just that boring. Since I've been 10 years old, I also always wanted to be a lawyer. Crypto, that was merely by pure luck. Somebody one day offered me money to represent them in court in a case about a failed transfer of some obscure token. And I said, yes, sure, sounds like fun. And then more crypto cases came my way. And at one point, I figured I might as well just call me an expert in crypto disputes. And here we are.
We'll put a pin in that for just a moment. Josh, same question to you. Did your parents knew you wanted to go into business? Did they know you wanted to be a lawyer too? Or how did you find yourself there?
I didn't even know I wanted to be a lawyer until immediately before I applied to law school. It's been an interesting journey, but also an interesting journey into crypto for me. For about a decade before then, I'd been a leveraged finance and securities lawyer, right? I had heard of Bitcoin along the way, but I didn't think things like that were going to have an impact directly on my career. But when I started hearing about big banks about, 9 years ago or so now, starting to have incubators and thinking about having smart contracts to reduce legal spend, that's when I was like, wait a minute, I am legal spend. What is this? And so I started looking into it further. I thought initially that I was going to be poking holes in all kinds of things and finding, because I came at it from a kind of skeptical view, and I didn't want what I did to be commoditized, right, by a smart contract. But actually I ended up falling in love with this space by going to like meetups and conferences and meeting entrepreneurs and really realizing that actually, a lot of game theory and other things that I thought were super cool when I was in college, but I thought would have nothing to do with my legal practice, that actually they were connected. So I guess I found my tribe unexpectedly.
I
No,
do have to
that,
say, Josh, your story sounds much more inspirational than mine.
We got to the same place, right?
think that that's perfectly fine. I don't think it matters quite which door you come through as long as that you've made it in. And I think that's a testament to both of your own pathways. One thing that I guess now comes to mind as we sort of start thinking about the sort of underlying theme of today's episode, crypto disputes. I guess maybe a sort of threshold question might be when someone says crypto disputes, I mean, what does that typically mean? I think that that could have a lot of different definitions. And so maybe either of you, whoever wants to take this first, when you hear crypto disputes, what does that trigger in your mind? What are you thinking of?
Kind of crypto disputes that I've seen, you can put them into three different groups. You have your frauds and hackings. Those are the ones that you usually read about in the newspaper when somebody's able to hack a wallet and steal millions of bitcoins or whatever token you have. Then you have the second group, basically normal contract disputes, but they relate to crypto transactions or crypto businesses. You have your relationship between users and crypto exchanges. You have cooperation or joint venture agreements. You have investments in startups that are structured via a token. And then you have your third group, which has been quite active in the last 2 years, I would say. This is the regulatory litigation, where usually enforcement actions by a financial markets regulator because a crypto company is suspected of being in breach of some financial market law, and most often they have failed to apply for a license. And what they're doing would require a license. And unfortunately, they very publicly advertise what they're doing. And so the financial markets regulator then usually sends them a questionnaire and then they start proceedings against them. However, do not see very often in my practice are the really pure blockchain disputes that are resolved on chain with smart contracts or decentralized justice protocols. But they're not really part of my practice, to be honest, because there are just not that many cases with high stakes involved.
So if I can build on what Nino described, which I think was an excellent description, frankly, I think within the U.S., a lot of, in addition to what Nino mentioned about traditional contracts disputes and frauds and things like that, just to build on the regulatory disputes for a moment, in the U.S. we have lots of different regulators that have sometimes and often overlapping jurisdiction over digital assets and digital asset related transactions. So questions arise um, in the enforcement action context, but also in private litigation and potential putative class actions, right? Where people say, oh, this was a security. You had an unregistered offering of securities and you didn't have an exemption that applied, right? Now, what I would just say that is the case. Then if your token is, or the some people would say it's the actual transaction involving the token and not the token itself, but that itself is a dispute that's being litigated in the court, right? Which piece, if any, is a security, the actual token or the wrapper of this transaction. But say you take the SEC's view, which often is that the token itself is a security, then you have all of these downstream effects like, was there a broker dealer? Did the platforms that were trading the token, did they need to register as exchanges? All sorts of things. So that's just one area, but FinCEN, the CFTC, Treasury, the OCC, the IRS, all of these and more agencies at the federal level, but then also at the state level, they're really in the courts battling things out. And some of the disputes that are being, the defenses have raised things like, hey, this is beyond the scope of your statutory grant agency, right? This is a matter for Congress. So I think that's where a lot of disputes are coming up.
Maybe what immediately comes to mind for me then is understanding that within the world of law, there are so many different traditions and ways that legal systems treat things, not even just common law, civil law, just even within those permutations. I wonder if there are any jurisdictions that come to mind for you that are dealing with crypto in a responsible way or a way that you think is sort of the manner that it should be, or I guess maybe are crypto friendly. Maybe that's a better term.
Thanks so much, Chris. That's a great question. I think there certainly are jurisdictions that are viewed as being more crypto friendly. And by crypto friendly, I really mean where you can find certainty. And a lot of times that's because there may be one or maybe a couple regulators that are tasked with these questions. One of those jurisdictions is Switzerland, right? Because you have FINMA. Then other jurisdictions, including, for example, Gibraltar, or I have colleagues in Singapore, and they're usually able to get very clear answers from the MAS. Similarly, even with Germany, right, and BaFin, being able to get, I would say, no action relief or some kind of statement that your token is this, and therefore, right, whether it's, and this concept is not really something that our regulators particularly have expressed agreement with, this idea of a utility token, because our securities regulator will still say often, well, it still could be a security even if it has a utility. But in other jurisdictions, you can have a utility token, for example, or a payment token, something like that, or other types. And you can know what that means and what path you need to follow, what kinds of licensing or registration you need, and what the future holds. You can have a clear path. Whereas in the US, it's very transaction focused. So you have to think about, how are you offering? How are you marketing? How are you selling this? I will say jurisdictions, and increasingly this is coming up, the jurisdictions have introduced marketing rules that are specific to crypto. So certainly we will see more disputes around that in the future. The UK, has recently updated its rules around crypto marketing. But I think even with these updates, and even with potential additional legislation or regulation that could come into effect, it's still a very different landscape from the US, where we have no clear single path for how to proceed.
Okay, no, I think that's all very interesting. Nino, I have some specific questions from sort of a litigation standpoint, but I guess maybe before we do that, I mean, any jurisdictions in your mind that you think are sort of setting a good example or good foundation for doing business with crypto?
Here in Europe, for me, it's Switzerland and England. I mean, if it's a fraud case, I want it to be heard in England because nobody does fraud litigation like the British. I mean, the kind of disclosure orders you can get, you can do an action against person unknown. That's far better than anything you could do on the continent. If it comes to contract claims, I'm a big fan of Swiss law because it's easy to get specific performance, which is quite often important because your client really wants to get those tokens and not just compensation. Depends on who your client is, but if you have really sort of a visionary kind of client who really believes in the system, in the democratization of finance and so on, they really want to have that token. It's not always about the money for them. And here I strongly prefer Swiss law, but if it has to be English law, I mean, it's not a killer.
Going with that same theme, and Josh, I'm going to ping pong this back to you here in a moment to talk about another type of dispute. But before we do that, I wonder, Nino, what makes crypto disputes different from just, I guess, a regular type of litigation or business dispute that might come up? Is there anything that comes to mind for you?
Yeah, I mean, it's a different industry, and you need to have some kind of basic technical understanding of how those things work. You need to know what is a wallet, what is staking. I mean, just those basics that you need to be aware of. And what makes it quite special is that, I mean, it's a litigator's dream. You have very poorly drafted contracts, but incredibly high amounts at stake. I mean, the arbitration clause you see, you wouldn't believe it. I mean, it's horrible. And it's an entirely new level of ambiguity that you will see. There are contradictory clauses in almost all contracts. This has been obvious copying and pasting from other parts of contracts. It's a nightmare. I mean, it's getting better these days, but still slowly. And I'm not just talking about startups. I mean, even some contracts that I've seen from crypto exchanges, you wouldn't believe it. They're horrible.
Is I should resign from my day job and I should go open up a litigation for crypto.
It's really good fun. I mean, I'm not talking about from client's perspective, but I mean, as a litigator, when you have these really badly drafted contracts, that's when you can come up with really interesting arguments. You can be very creative. And the other thing that you often have legally unsophisticated clients. I mean, for most of them, it's the first time that they go to a court or to arbitration proceedings. And this is not your average Joe businessman. I mean, I'm talking, you have someone showing up in a hoodie and you're communicating with them via Telegram. It's a very different vibe, and you need to embrace that. You need to treat those clients a bit differently.
All I'll say is that there will be no hoodie slander on this show, okay? I'm wearing a hoodie. For those you can't see, me. But anyway, well, look, there's one more question, I guess, that comes to mind for that. Nino, is there a preferred dispute resolution mechanism? I heard you mention litigation, but also arbitration. I mean, are crypto disputes typically in one or the other more often than not?
They're moving more and more to arbitration, and I'm very happy about that. Because if it's arbitration, I can appoint at least one person that has some crypto knowledge. And I mean, the judges here in Switzerland, especially in Zug and in Zurich, they're getting better at it. But if you have to explain a really complicated concept to them, it's not an ideal setting. And courts are slower than arbitration, at least in average, and speed is really key when you're in an industry that is so volatile as crypto.
Are there any arbitration centers specifically that have like crypto rules or anything like that?
There are some small institutions that tried that, but the clauses I see, they're usually Hong Kong rules, Swiss rules, or ICC rules, and the AAA rules in the States. Those are the four that I see most often.
Okay, AAA, ICC, Hong Kong, and what was the other one?
Swiss rules.
Swiss rules. Got it. Okay. And turning to you then, Josh, I know that you had mentioned that there was another type of dispute you wanted to sort of throw out there. What's on your mind there?
Sure. So, one of the things that I think is a big thing right now for regulators, but I think for private plaintiffs as well, is the question of in a decentralized system, whom do you hold and whom can you hold responsible? And what is this system? The reason that I think this is so complex, well, at least some of the reasons, I'm not going to go into every possible reason, right? But one of the reasons is that obviously there's an ethos of decentralization for Web3 and, and digital asset communities generally. But at the same time, guidance from the SEC in the US has indicated that in certain circumstances, if some ecosystem is truly decentralized, such that you do not have specifically identifiable persons, active participants in the SEC's parlance, that maybe there is no longer existence of securities transactions or of a certain token being, in the SEC's view, a security, right? If people aren't looking to a specific group of people with an expectation of profit. I won't go into the Howey test. I'm sure you guys are very familiar with it, and I'm sure many listeners would not like me to go into it, but just thinking about how that fits with decentralization, the challenge is that for certain areas of the law, for example, the US Treasury has made clear in a report, it emphasized that for purposes of KYC, so know your customer, anti money laundering, similar rules, it doesn't matter if you're decentralized. That obligation still exists, right? You must find a way to comply with it. How this plays out, though, is that in many cases, there's been, as you guys know, a resurgence in these decentralized autonomous organizations. They never went away, but we've seen them more and more. These decentralized systems, in some sense, they're showing that it's not just one person making the decision. But what we've seen, including in actions by the CFTC, as well as private plaintiffs and others, is this question of, okay, how do we hold this liable? And so where this comes up, the CFTC in one action basically said, okay, if there are governance tokens, we are going to hold liable in a particular case those who acted, who participated in governance, right? Even if they participated in governance to say, oh no, don't do this. And in a similar related case that was brought by private plaintiffs against a predecessor entity, so there actually is some relation between those two cases. It was brought on a theory of negligence, saying this is an unincorporated association and or a general partnership, right? So there's joint and several liability. This theory that there had been a duty of care, that it was violated, that that it was foreseeable, and that there were damages. So it's just very interesting thing. And in that case, it really was the idea was everyone is jointly and severally liable who participated in this DAO. So as we look through that, we're seeing it also come up in the context of sanctions. So we had the OFAC, right, and Treasury bringing suit against Tornado Cash. And of course, the crypto industry, the digital assets industry, pushed back and said, this is a smart contract. This isn't a person. This is outside your statutory authority. A court found otherwise and found in favor of Treasury. However, as a result of that, we saw FinCEN, which is an arm of Treasury that talks about financial crimes, right? They began using powers that they really never frequently used under Section 311 of the Patriot Act to say, you know what, all mixer transactions are now going to be designated as primary money laundering concern. So, what we're seeing is agencies trying to find solutions and trying to find persons, whether these persons are entities or individuals, to hold liable, while many in the industry, whether accurately, because this is what the facts are, and in fact there is no one single person, or in other instances, similar to what Nina was saying about frauds and things like that, where in fact maybe there are people to hold liable, but they're just trying to mask it. So I think that this is a whole area of dispute in terms of how you go about enforcing and stopping behavior.
Patriot Act in that way, or using other regulatory mechanisms like that is kind of a little bit like a sledgehammer to an ant. No, I mean that's a big sort of reaction. It's kind of my impression hearing that.
Yes, absolutely, because it's a little used power. But I think just more broadly, I mean, this is something I could go into for long periods of time, but I won't. Don't worry. Is just I do believe that the U.S. government and probably some others are viewing tech and in particular digital assets, but not limited to digital assets. I mean, certainly AI and other types of an infrastructure as a service as well, but different types of technology as like through a national security lens. So I think that's part of why they use tools from the Patriot Act, right? Because they thought that this is of extreme importance. But at the same time, I think what it shows is the industry has really pushed back in court in the US against regulators and has had some success. It used to be that there would be an enforcement action by the SEC or some other body, and the industry, at least in the US, would cower, right? Whereas now cases have been brought, and a lot of that was partly because they were brought against what one might think of as low hanging fruit, where there were obvious frauds or scams. Now, when cases are brought against well capitalized entities, or where the industry has united to say, hey, this case is of interest to the broader community, and we need to provide amicus briefs or we need to otherwise assist in this battle. I think regulators are looking for other solutions because they don't necessarily feel assured a win.
Think there is quite a number of threads we could pull on there. So we'll have to make that for the sequel, I think, to this this conversation. Nino, turning to you for a moment. We talked and touched on smart contracts a couple of times so far in this conversation today. I wonder what your perspective would be on the role of smart contracts and they could play on how you sort of manage the frequency and the types of disputes that might arise.
Personally, I'm a bit skeptical whether they will really change the disputes landscape, because for me, they will mainly just change who has to act as claimant and who has to act as respondent. Because I mean, all a smart contract usually does is automate the execution of the contract, the performance of the contract. And sometimes they don't even work as planned, and you have a whole different dispute. But I think it's utopian to think that you could address all potential issues of a dispute in a smart contract. Just you're not able to do it today with a standard legal contract. We can't do this. Otherwise, I would be out of a job.
Let me ask you this before, as you're answering that though. I definitely know what a smart contract is. I mean, you don't got to explain it to me, but I mean, if there's someone out there listening who don't know what a smart contract is, maybe you could tell them like what a smart contract is first. Maybe just the basic element. I know that there's a lot of permutations to it. I mean, I say it with a little bit of jest.
It's a digital contract that is more often than not, it's stored on a blockchain, and it automatically executes if certain conditions are met. And the thing about what makes smart contracts really powerful is if you're able to combine them with an oracle. To give you a very simple example, you're a farmer, Chris, and you have insurance for weather, and whenever the temperature is above a certain level for 10 consecutive times, you get paid, the insurance pays you out a certain amount of money. And then you have a specific website, maybe the national weather website, functioning as an oracle, and as soon as those 10 days are there, you will automatically be paid the money. That's the smart contract in a nutshell. But I'm sure Josh could probably explain it much more succinctly than I can, because I only deal with smart contracts when they don't work.
It's funny that you say that, Nino, because actually I think the whole term smart contract is kind of a misnomer, right? Because they're not smart and they're computer code. Like whether they're a contract, that's for litigators like you guys to figure out whether actually a contract was formed, right? It's really this computer code, as you said, that uses if then logic to cause something to happen if there's a certain input. So the oracles that you're talking about, as we all know, but just for the benefit of the audience, those are just, what's happening in the real world, right? So if we have a bet over who's going to win a boxing match between Nino and Chris, I know you guys, are big fans of
I
each
like
other,
that idea.
and I have a bet and I say, oh, you know what? Chris didn't like that comment about the hoodie. I'm going for him. And then sure enough, I wait. We say we're gonna look to this one particular television channel to see for this televised fight, and then lo and behold, no offense, but Chris does prevail, and automatically that payout occurs. So
So what I'm gathering though from both of your explanations are that they are a sequence. It's sort of the connective tissue between an action being taken and the conditions to that action. And in this case, we're talking about financial things happening, generally speaking. Is that right?
I'm going to say something that Josh might hate, but for me, when I think about a smart contract, it's just a replacement for an escrow agent. Because essentially, I mean, this is my point. I don't think smart contracts are really about dispute avoidance. They're about replacing trust. Because in the crypto world, it's very hard to trust your contract partner because often you don't know who they are, you don't know what they've done, you don't know where they live. So if they don't pay you, you will have a really hard time to enforce your claim. And a smart contract that automates that payment if certain conditions are met, this can really be a cure for that lack of trust. But for me, it's like an escrow agent. I mean, if I have an escrow agent that I trust, and here I don't trust the person, I probably trust the code when it's a smart contract. I know where the money is, and I know that the money will be released if certain conditions are met. The good thing about smart contracts is they're much cheaper than escrow agents.
Okay. So then what role do they play in managing disputes?
Not a very significant one in my view, but as I said, I'm a skeptic when it comes to smart contracts. I've seen too many smart contracts being the source of a dispute.
Josh, do you have anything that you would add to that?
So what I would say is, I agree with, in certain circumstances, right? I think smart contracts can be broader. Certainly, even if you think of a vending machine, right? Like that is like the traditional, like you put in money, you push your button, you get out your candy bar, and no human was involved. So that's one type of example. But even digital assets, the way they're programmed, there are smart contracts associated with them that govern the rights. If you need discretion, if you're thinking about what is material, if you're thinking about what is reasonable, when you have contracts that use those very common terms, you're thinking about what's commercially practicable, right? You can't, in my view, rely on smart contracts for that unless you have some other, either a human involved or some other kind of, I don't know, AI or something like that involved. So I do think that the things that smart contracts can and should be used for, at least at this point, is very brittle. I do think that certainly if people say we are going to rely on the operation of this contract and we assume all the risks associated with it, I assume that could help potentially avoid disputes. At the same time, I think the reliance on smart contracts for dispute resolution is a little challenging because we don't have that many people, frankly, who can actually read the words, right? Who are, hopefully, we'll have more over time, but who can read the words and then read the code and say, yes, this matches. So I think, in addition to unintentional weaknesses in the code, where there may be vulnerabilities that people haven't identified, that can be a source of disputes, right? If there's a bug and you don't know it, but also whether it actually matches the contract. And I think one of the things we saw from the ICO boom, after the ICO boom in like 2017, et cetera, the University of Pennsylvania, the engineering department, I believe Wharton, and probably the law school, I can't remember the exact players involved, but they had an article called Coin Operated Capitalism. And one of the things it talked about was they had done an analysis of what white papers said, and then actually the smart contracts that governed the tokens. And there was very little correspondence between the two.
Yeah.
So at least that's my recollection
Mhm.
about that article. But so I do think that people may be somewhat deterred, maybe from bringing suit if they have agreed to rely on this smart contract. But I do think that there are limits. At the same time, the way Nino described it as an escrow agent, I think does make sense in many contexts. Also, when you think about if you have an escrow agent and the kind of documentation you would normally enter into with this agent, the agent doesn't want to have to exercise discretion, right? They want to be able to say, you sent me this thing. I'm relying on your statement that this money can be released and that these conditions have been met. And so I will release it. And that's really what the smart contract is doing, just being very mechanical.
Well, look, I mean, I think that we should be smart about this conversation, and we should follow our contract to take a brief break. So thank you for teeing that up so far, and we'll come back on the other side in just a moment.